Good morning, everybody. How's everybody doing today? Hope you had a good weekend. We're back. It is Tuesday, June 8th. We're going to be taking a look at the data from the banks. We're going to look at what the institutions are doing with their positions and what is potentially coming down the road for us. So this is going to be interesting. So how's everybody doing this morning? Good? Good. So first I just wanted to show the journal portion of our website, whiteoakfx.com/journal. And this, in case you don't know, this is exactly where I post every weekend. I post a simple version of the EURUSD report that we do every single weekend. And the latest one that I did is this one here, banks trying to get traders to buy gold. So this one is, this version that I post on our site is just a very simplified version of the EURUSD report. Okay, it's got a little bit of information, no specific details about trades that we're in or anything like that, but you can find screenshots of what we put in the EURUSD report, mainly the positions from the institutions and whether those positions are aggressive or not aggressive. And I've also placed an image of the monthly and weekly charts with the institutional supply and demand. Okay, now there's nothing specifically here to break down what the institutions are doing with their positions and what is to be expected. That I detail in the EURUSD report for students. Okay. Alright, so let's get to looking at these positions and see what's going on here. Okay. Alright, gold. What do we got with gold? So this latest set of data, we don't see much of a move here. Did you guys notice that? If you guys were taking a look at the data, long positions, they didn't do anything. 288, they're still 288. And short positions, they slightly increased short positions from 73 to 75. All right. Now that was coming up this way on the monthly chart, or sorry, on the daily chart. Now remember the push lower from these highs as supply was being contacted. Now we also had mentioned that there was a push lower here on gold, and that was likely caused by, once supply gets contacted, shorts increase. Okay, 73 to 75,000. Now that's not nearly as large as what we had just a few weeks ago. Just a few weeks ago, it was in the 90s and hundreds. Okay, but that was also as price was down here after such a significant drop. Okay, they went from very small positions, 57, all the way up to that as price dropped. All right, so what do we suspect is going to happen? Well, we talked about this last week in some detail, that we have a situation where price is moving out of this area that we were expecting to have broken through. It finally broke through to the upside, and what we are expecting is some kind of a retracement down before them continuing price to the upside. All right, so far price contacted supply, and we're seeing a slight push to the downside. Now, is this going to hold and continue to the downside? It's likely going to. Can we know 100%? No, we can't know 100%. There's certain times where we can know with very, very high certainty that a move is going to happen in the markets, but there's other times where we don't know with high certainty that a certain move is going to take place. Okay, but it's very likely. Now remember, NFP came out on Friday, And if we take a quick glance at the dollar, you remember what we were looking at with the dollar, right? NFP came out and it was negative, which caused price to drop, all right? And at the same time, gold was contacting that area of supply that we had mapped out. And then price dropped. So let's remember that. Let's remember that. So a further move to the downside definitely could take place. My estimation is we see something like this, all right? So what type of a move is that? That's a midterm move. Midterm, remember, midterm is multiple days and weeks. Okay, multiple days to many weeks. Could be a couple weeks. So we're looking at a daily chart. So think about how many candles would be required to get down there. So we're looking at midterm. Okay, midterm drop to the downside. All right. And when you look at the data, you can see that since March, longs are the aggressor. 26, 265, 250s, 270s, 280s, 209. Okay, so you can see what's happening here. This last portion here. This is super aggressive. This is very aggressive with long positions. And you look at the short positions, there's nothing very substantial here. Okay? The more substantial position is longs. So midterm to the downside, but long term, very long term, we are seeing more upside on this one. Okay? Very long term. And remember, very long term is months and years. Okay? Long term is weeks and months. But that's what we're seeing. Alright, let's go to oil. Let's see. Oil. I spent quite a time looking at oil this past weekend. I spent quite a time because it's a very, very unique puzzle. You know, I just like to stare at the charts and look at the institutional supply and demand and try to figure out what's taking place here. That's what I love to do. So I was looking at the charts and well, let's do something here. Just want to focus on certain charts here. There we go. Boom. Boom. So every time I do the report and I work on the data, it always makes me focus on each individual chart. And I like doing that because I like to focus in on, you know, what exactly the institutions are doing in terms of their supply and demand on the charts. And I'm trying to relate it to what I'm seeing with the data. Now, if we take a look at the data here, we can see that longs are the more aggressive position. And they typically are. When you look at the historical data for oil, longs are usually the big player. Let's see what's going on here. Trading view failed to load up. Let's see if I can get it back. Longs are very aggressive, and they typically are aggressive. Alright, let's see. We can get our charts back up. Here they come. And let's go back to where we were. Let's see. There we go. That's better. Alright. Thank you very much. Sorry for the delay. There we go. So I was looking at oil in some detail, trying to figure out what is going on here. The The chart was very interesting here, the monthly chart. When I was examining the historical charts, I was trying to determine what was taking place. And so what I see is that we're coming into an area of supply here. Okay. But over the longer term, we are expecting more upside on this chart. Now, when we look at the positions here, we can clearly see that longs are more aggressive than shorts. That's for sure. And from March, they've actually been decreasing. And that would take us in through here. Okay. In March, they've been decreasing their positions. So that's looks like profit taking, right, from up here. Then price came down. Then we had that slight drop to the downside. And now that area of supply is being removed and price is heading higher. But it's heading higher right into an area of supply right here on the monthly chart. So I was looking at that monthly chart and trying to determine its validity. Now, usually on the chart we'll have areas of supply and demand, but they contain different levels of quality to them. So depending on the level of quality of each zone, we can usually determine whether or not areas are going to be taken out or not. And so by looking at this monthly chart, I see a very good chance that this area here is going to be taken out and price is going to continue even higher. Okay? And again, that's over the long and very long term, right? Because there could be short-term moves to the downside, short to mid-term moves to the downside, but over the longer term we expect that to be taken out. Okay? Now it's very difficult to determine that by looking at the data because like I said, they've been long for a long time. All right? So very difficult. But the charts are suggesting that move. Now let's go over to the US dollar, shall we? US dollar, we look at the data and price was down here, just sitting there at the bottom. And as it was doing that, longs increased from 27 to 30,000. So an increase in long positions. Now remember what we were talking about last week. Okay? Last week we had negative NFP data, which caused price to drop. Now, when we examine the charts to determine why price would drop, you see that there's no supply here on the chart. So there's no reason by the banks for the banks to drop price. There's no reason for that. Okay? This is not in the cards, so to say. When we're looking at what's taking place in the charts, it wasn't in the cards for a move to the downside from these highs. Otherwise, there would be institutional supply there that would help facilitate that. But instead, the data came out in such a way that it looked as if it was very negative, even though there was an increase. It didn't reach the consensus, and therefore it was considered to be negative. So retail traders jumped in and shorted the dollar, which caused this drop in price. Okay? All right. Now let's keep that in mind when examining the data. So price is down at these lows, and what are we seeing the banks doing? Increasing long positions. At the same time, they also are increasing short positions, 24 to 27. Now, let me tell you, what they could be in the process of doing right now is increasing shorts and increasing longs as price rallies. Okay? They could be in the process of setting something up like that. And it's very typical to see something like that because if they are indeed preparing to drop price down, which so far that looks exactly like what they're doing. I mean, we knew that price was going to rally up into this area and reverse, okay? And that's exactly what took place. And we know that this area down here is an area that's been already contacted, and it's so the area is being eaten up. Any demand that was sitting there by the banks is slowly being used up. All right? So it's very likely that we could see a push to the upside. It would be midterm, a midterm push to the upside, right? And remember, midterm, just to keep things on the top of your mind here, let me show you something. I have it laid out here. There we go. There we go. Okay. I can leave that up here so you can see. There you go. So again, midterm, we can definitely see a push up. Okay. Midterm, we can see a definite push up from here. It would make complete sense to do that. Now, to know exactly if that's going to take place, it's very difficult to know that because of the circumstances that the charts are in right now. And we've talked about this before, okay? For instance, doing a top-down analysis, we'd be starting on the monthly chart. And so we're trying to locate trends. And is there a trend on the monthly chart? The answer is no. Okay? Is there a trend on the weekly chart? The answer is no. Is there a trend on the daily chart? The answer is no. So we've got 3 of the major time frames that we would like to have trending for us to know with some certainty the direction of price, and we don't have that taking place right now on any of these charts. So just looking at these charts, we know that there's a lack of trend for any of them. All right, but there's another thing that we can do. All right, so we're looking at direction and potential for movement, right? And we're looking at what is likely going to take place based on what the banks have created on the charts. So let's say we're looking for green is go and red is no. We look at this monthly chart, we have supply in play here. And that counts for a lot. Okay? That counts for a lot. With supply in play, we expect the move to the downside to be substantial. So based on the monthly chart, we're good to go for a move lower. All right? Now, when we look at the weekly chart, I wouldn't say it's necessarily a red, but more like a yellow. Okay? Just like when you get to the stoplight. Yellow, slow down, right? Be cautious. It's not so much of a go. If I look at this weekly chart, it's like, be cautious. Be cautious. Yes, we got the green light on the monthly, but be cautious when we're looking at the weekly because, we see supply, but it's very high up on the chart. Okay? And we don't have any trends to the downside. So a lot of things can happen right now. It's like I've always said, when you have a ship in the middle of the ocean and its sails are up, but there's no wind whatsoever, to determine what direction that ship is going to go in, it'd be very difficult to do that. Why? Because first of all, it's in the middle of the ocean, it's got its sails up, and we're waiting for some kind of wind to kick in to push that boat. If the wind is not there, then we don't know what direction it's going to go, right? But if the wind is blowing in a certain direction, then we know with some certainty that it's going in that direction. So when price came up here, for instance, okay, and contacted this area of supply, we knew that the wind was going to be blowing down. And that's why we got this push to the downside. But looking at the weekly chart, you can see price is just sitting sideways. What does that mean? There's no wind in the sails right now. So we've got to be very careful in trying to determine direction of price based on this chart. All right? So that's just a couple things I wanted to point out. So going back to the data, shorts are starting to get aggressive. That's good. They could be starting to build up a larger position for an eventual move lower. And this slight increase in long positions, this could be a good thing too. Okay? This could be setting up for a move to the upside. Um, so let's see oil. Sorry, we did that one already. So Aussie. So Aussie's sitting at these highs. We got some supply in play. We look at the positions here, and it's really not telling us much. All right, the sentiment is very neutral. I mean, 49% of their positions are uh, uh, long, and 51% are short. So that's not really telling us anything there. Okay. Uh, Evans, the trend seems to be bearish on the weekly for a dollar. No, it's not. It's not bearish. Okay? And a lot of traders might think that same thing because why? Because it went down like this? No, we would not consider this to be a bearish trend. Not yet. There's very specific things that we'd be watching for in order to know for a fact that the trend is down. But there's a difference between thinking it's down and knowing for a fact it's down. And right now, there's no fact about it. It's not down. Okay. Let's see. Just like the end of 2020 on the Dixie, everybody and the guy who pumps your gas was saying, sell a dollar, buy the euro, and the banks ate that up early in 2021. Um, yeah, with the rally upwards, yeah, well, it rallied up because it was contacting demand. So yeah, it's that would be setting retail traders into getting into the opposite trade, like we've always seen. So there's no surprise there. So Aussie, it's not really showing us much in terms of the positions. Yeah, positions slightly favor shorts, but you look at the percentage that they're holding in longs and shorts, and there's not really much there to see. US CAD, what do we see? We see that shorts are the aggressive position. Okay? And they got even more aggressive this past week. From 84 to 89,000. Remember, that's as prices sitting here at these lows. So, a slight increase in long positions, over the last few weeks, 35 to 40. Nothing big, but slight increase. So this, to me, is telling me, based on what we're looking at with the dollar, we're seeing a midterm potential move to the upside, right? Midterm move to the upside. So if there was to be a midterm move to the upside with the US CAD, which is likely, it wouldn't be something that we would suspect would be sustainable. Okay. So, and look how aggressive they are with their shorts. They just keep on piling on. They're not backing off. Okay. The only thing I will point out is that they're getting very close to being near their maximum size of 105,000. Right? So we're about, 15,000 away, 16,000 away from reaching that. So we should be aware of that because what tends to happen when price starts to get near those maximum numbers, they start taking profits and then price will move in the opposite direction. So I just want us to be aware of that. US Swiss franc, we talked about the potential for a move up coming off of that area of demand that price was contacting. And so that's where we are right now, right at that area of demand. And so we look at positions and we see that longs are still at 13 and shorts slightly increased from 12 to 13. So it's basically over the last few weeks they increased their shorts from 11 to 13,000. So that's not bad. That's not bad. Um, overall we're seeing the sentiment for the dollar is dropping, US CAD dropping, and this one is kind of suggesting the same thing. Weekly demand in play, yes, it could go up. At the bottom, at the end of the day, we don't have a trend here on the weekly chart. It is ranging, so it can do just about anything. So we just got to wait and see. Euro US dollar. So here's another good one. So the Euro US dollar, last week we had NFP, which was negative. And so everybody was shorting the US dollar, going long euro. So there's that bullish pressure on euro. Now, the same thing, when we take a look at the charts to determine, what direction price is likely going to go, we're bullish the euro, okay? Long term. We're bullish the euro the long term. And so when we look at the charts to, validate that, we look at the monthly chart and it's giving us a go. It's good to go. All right? But the yellow, again, is warning us. The wind is not strong. The wind is not strong. And when we're looking at the daily chart, that's what I see. Don't be making trading decisions to go long based on this chart, because it's likely not going to move upwards. And then you look at the 4-hour chart, and I have that. Okay? So how you can read this is, if you're looking at the monthly chart, over multiple months, we suspect price will continue higher. Over multiple weeks, price can go either down or up. There's nothing to let us know for sure that it's either going to go up or down from this chart. When examining the daily chart, it's likely going to go lower. And when examining the 4-hour chart, we're likely to see price go lower. Okay? So that's what we're seeing there. Then we take a look at the data, and what do we see? We see that longs have been increasing 223, 232, 236, 237, okay, quite steadily. Quite steadily, all right, as price has been consolidating here. Similar to what we're seeing on the other pairs. In the overall direction that we have determined price will head in based on the longer term, all right? But I also will point out that we're getting very close to the max size of 266,000. So we're getting close there. Can we surpass that? Sure we can. But I just want to be aware of that. Pound. Pound is consolidating at the highs here. And we see, it's been a steady holding of aggressive long positions. Recent push higher with short positions, 33 to 40,000, but nothing substantial. Overall, what we're seeing is bullish pressure, but we have supply in place, so there could be some delays until price continues higher. US dollar, Japanese yen. This one contacted the daily area of supply that we had here and then dropped as we had suspected. Long positions 74 to 76 and a slight increase in short positions. Bottom line is, was very bullish, becoming a little bit less so now. And price is sitting within this range that we've been talking about for some time. And last but not least, we got the Kiwi. And Kiwi did pretty much nothing in terms of long positions, still at 24, and a slight increase in short positions from 15 to 18 as price was rallying up into the area of supply that we have. Okay, so it doesn't move lower from here. It's hard to determine. Probably short-term move or mid-term move to the downside before things continue upwards. All right, so that's what I'm seeing in terms of the positions. Hit that like button if you haven't yet. I would appreciate that. Move over there and hit that like button. And let's quickly take a look at the positions being held by retail traders. Very interested to see that. Okay, so we see what the banks are up to. Okay, we went over that. We see what the banks are up to. Now let's see what retail traders are up to. This should be very telling. Because remember, we need retail to be doing the exact opposite of what the banks are going to be doing. We know what the banks are planning long term. Okay? And we just discussed what we are expecting short and midterm on price. Okay? So let's look at what the positions are in terms of the retail traders. So retail traders right now with euro, they are mostly short. Okay? Mostly short with retail. Let's just move that to the side here. And remember with euro, we had that slight drop here, contacted demand pushing up. So right now they are on the right side of that shorter term move. Okay? Right now they are on the right side of that shorter term move. Because again, if you look at their positions, they're mostly short right now. Mostly short. But they can drive price up like this and make a fake breakout because look, we have supply here that still hasn't been contacted. They can drive price up, get them out of those shorts, and then push price down. That's what I'm thinking by looking at that data. Pound US dollar, they're mostly short. Interesting. US dollar Japanese yen, slight bearish sentiment there. US CAD, they're so aggressively long. You know, again, this is retail traders looking at the chart saying, what a massive move to the downside. This has to move up because it's overextended to the downside. But it really isn't overextended to the downside. It really isn't. Okay? When you look at the higher time frame charts, this is really nothing. You have to place it in the right context. So retail traders think that that's a great bet. And they've been thinking that being long was a great bet for quite some time, but they've been very wrong with that. Okay? We were in short. We took our profits while they were in long. Not good. Let's see what else we got here. Where is it? All these other pairs are not supposed to be here. I went into the settings to fix that already. Oil, Brent, they're slightly bearish, and XTI, look at that. They're very, very long. Very long, right? And what do we say? Price is contacting supply. So since they're very long, yeah, maybe the banks will want to shake them out with a nice drop. So that'd be interesting to see how that plays out. But it looks very much like that could be taking place, or that could be setting up at least. Okay. Let's take a look at gold. Where's gold? Gold. Right here. Gold. They got more short. They got more short than long right now. So I would say they're in the right position at this point. They're in the right position. But they could have been short from this rally up. That's very possible. Okay, so that's interesting. Very interesting. Yeah, I'll have to go back inside and oh, it's all check marked again. Not good. All right, so that's it, guys and gals. I just wanted to go through the CFTC report with you guys and prepare you for what is likely to come. I think it's a pretty clear story of what's taking place. So we just got to be aware of that. We are ready to strike and enter into more positions, but just got to wait and see what's going to take place because I do think we're going to be getting some shorter term to mid-term retracements before price slowly will start to shift in the opposite direction. All right, so that's it. If you guys can hit the like button one more time for me, I'd really appreciate it. And so I'll let you guys go. If you have any questions, you can always shoot me an email. And until tomorrow, enjoy the rest of your day, and we'll